So, hello, and a massive hello to everybody. Hope everybody's having a great day. Rocking and rolling here. Hope everybody's having a great Sunday. Hope everybody's had a great weekend so far. So, this is 50 pips. We're rocking and rolling, 17th of July, 2016. No trade calls, no recommendations. Everybody sponsor their own stuff. We're here for educational purpose only. Sessions are recorded. And we'll post this on the blog as soon as it's recorded. So, if you miss anything, don't worry. Any comments, any questions, anything anybody wants to desperately start with, shoot. As usual, the way we will run these sessions is basically it's an open Q&A. So you've got that Q&A to the left. We can review any pair you want. We can take any kind of question. Nothing's off the table. What I might try and do is I might try and tackle the chart questions first, and maybe if there's some other questions which are more trading related or psychology or God knows what, or we'll try and tackle them towards the end of the session. How does that sound? Okay, so is there any chart, any pair anybody wants to start with? Can anybody tell me sound is okay? Can just give me a heads up, or type a yes, no in the comment box, in the Q&A box, or just raise your hand, whatever. Okay, cool. Thanks, David. Okay, so yeah, here, yeah, Ray, as you suggest, we can start with the ES, right? Since we're on the chart. So what's going on with ES? So we've got this sharp rotation higher, right? Which is not particularly surprising the way it's been trading, right? We still think it'll be healthy to see some kind of a pullback because markets don't only move in a straight line, but so far, so good. We had discussed that we were trading pretty much in this 2100, 2050, and 2000 range, right? And we needed to start to see daily closes above, weekly closes above to get some traction. But once we were trading to the upside, what we felt, right, that the next targets that needed to be taken out were basically the old highs, 2133s, and then the extension targets we'd looked at to the upside. We had two targets, 2165, and we discussed these in the last outlook we did, and 2194. So you see here we've moved back into right inside the first area, and we're pulling off. So the way we look at this going into the week is daily close above 2165. We'd expect to see this continue to try and take a stab higher, right, all the way back up here, and that would mean a move back into the 2194s. As long as these 2165s don't break and we don't get a daily close above, we are looking for a correction back into these 2133s. 2133s, these old highs, are going to be basically the bull bear line should we sell off a little bit. And what that means is that as long as we catch a bid, then we would expect this to try and rally all the way back up into those old highs. But if we get a sharp move down and a quick daily close below the 2133s, now we'd expect those 2100s to be base support and for the market to try and come right back in there. Does that make sense? Any comments, any questions? Now, keep in mind that we've got an awful lot of geopolitical risk. We've got strange things, sad things going on in France, Turkey, across the board. So we'll have to see how the market opens, but this is basically the way we're looking at it. But we think there's a lot more, even though, you know, markets can remain irrational longer than you stay solvent. Hey, Karen, but, you know, there's a lot of room for a decent little correction to the downside. Now, keep in mind that we're going into a week where, again, as we said, it's going to be tricky to see how the market opens on Sunday following, you know, Turkey. It looks like so far things have calmed down a little bit. You know, don't want to get into a rant or a discussion on that. But so going into this week, it'll be interesting to see how we open on Sunday. It's a bank holiday in Japan, right? And the other thing which we also have to keep in mind is we have some interesting data points this week. We've got monetary policy meetings out of Australia. We do have the ZEW coming out. We got a decent amount of UK data. Keep in mind that on Thursday, we've also got an ECB press conference with a rate decision, so it'll be very interesting to see what Super Mario's got to say. And we do have unemployment claims and, out of the US. So that's going to be fairly interesting. But what's probably going to be even more interesting, right, and this brings to what we were discussing, the fact that we think that July, the back 2 weeks of July, are going to be exceptionally interesting, is because the week after this week coming up, we've got German IFO, we've got inflation report hearings out of the UK, but what we have, which is particularly interesting, is we've got an FOMC statement rate, right? And then on the Thursday, we've got a BOJ press conference, right, with a monetary policy statement. And we know that everybody's just waiting for the BOJ. We've got the outlook on Friday, so 29th. So basically these next 2 weeks, but especially the back end of the following week after next, that's going to be particularly interesting. And right now, the market is also trading on hopes or certainty or whatever that we're going to get a lot more easing coming out of the various central banks and especially out of the BOJ. So that's going to be very, very interesting. So, potential more clarity or not hawkish, dovish rhetoric out of the US, followed with something out of the BOJ, that is an interesting cocktail for some fireworks. So we think the back end of July is going to be particularly interesting in terms of trading opportunity. Okay, what that means for gold, right, is that as we discussed, gold is shifting higher, right? We had gold stuck in this 1,300 to 1,200 range, with 1,250 being mid. And we talked about this break being an aggressive range shift and shifting our range to 1,300, 1,350, 1,400. Right? So the way we're looking at this, and again, especially if equities start to retrace a little bit, you'd expect a gold to continue to hold a decent bid tone. Right now, the way we're looking at it is 1,300 base support, 1,400 base resistance, and as long as this dip holds right here, we'd expect it to try and rotate back up into that 1,350. That's going to be pivotal for Momo and flows, right? But the big question here is, are we going to hold this dip? If we hold this dip, we expect 1350s to attract. If we can't hold this dip, we'd suspect there's an awful lot of support coming in at the 1300, and then that 1350 being the next pivotal level here. Again, also keep in mind, if we get that move down in equities, it should stay fairly supported. Does that answer your question? Okay. Yeah, I think in terms of crude, what we're looking at, yeah, my pleasure. Always fun to do these sessions. I finally figured out what the issue was, why people couldn't get into the room. So yeah, sorry about the mess with that, right? So basically on crude, so our outlook hasn't particularly changed. We're looking for top to form in this bigger resistance zone, right? It was a bit choppy the way it formed, but as far as we're concerned, this intermediate top is in, right? So the level we're particularly interested now is this whole 38, 35 zone with, big interest at the 42s. What does that mean? That we feel that whether this is a healthy correction for a test to 57, 60s, etc., or whether this is the top of this descending channel, we're going to print back down into 25s. We feel that, or we like to play for a healthy market move, right? So we think that the way this is shaping up, we would expect any rallies into this area, right, to get sold for a continuation lower into these 4240s. The 4240s to be pivotal for either a move back into these 38s, which is the 50 back of this move up, right? Confluence, so number one, 50 back of the move up. Two, confluence with the mid-channel, right? And number three, confluence with this previous support or resistance zone highlighted here, right? So clearly it could bounce aggressively from the 42s, but we think that this area would be the healthy retracement zone. And this area will likely tell us whether we're going back higher or if we're going to correct lower. So we don't have a particular view long term. Our longer term outlook is still that we'd expect it to stay pretty much range bound, more supply to come in if we keep on pressing higher, jawboning if we press too lower. So we'd expect it to broadly be range bound. But for us right now, we've started downside correction. The first target would be those 4240s. Okay, does that make sense? Yeah, sure. Okay. Yeah. So, that's pretty much what we're looking at there, right? Yeah, exactly. So we'll have to see how this trades. Of course, really right now the most interesting thing is not only to see ES, but it seems to be, ES, bonds, and yen, right? Those are the most interesting charts out there. We don't like to get ahead of ourselves, but one thing which I would say is if you're trading bonds at all, you really need to be aware of the potential candle that's forming on the monthly, right? I know this is a shitty feed, but bear with me. But here we've completed a 123 extension target of this move off the 147s right back into the 176s, right? A pure symmetrical move off that level would be a move back into the 186. So we think the ultimate risk to the upside to the bonds is the 186, 190, 186, 190. But right now we think it'd be much healthier to see a correction right back down into the 160s, 150s. But again, I would keep a close eye on the action here at this on this monthly and see how this trades, especially if this starts to trade back below this zone. This is going to look uber heavy, right? Yeah, sure. CAD JPY, do you have a specific question on CAD JPY or just a general, what time frame are you looking at? It's not something we would look at really, so I don't know if you have a specific time frame you're looking at or if you have a specific question you have on the chart or just a general review. I mean, again, these are really charts that we don't fancy that much at all. It's not something we would ever trade, but let's just let's go on a daily. So here we've had this aggressive break lower, right? We had this attempt to build rotation higher here, and we've got a fairly orderly retracement here. This looks about a 50 back, and then bam, retracement, bam, and this is just an exhaustion low, right? So the big question here, or the way we'd be looking at it, is you see, as long as you see how this area was defended, BB? And we have this puke, right? As long as we can't hold back below, you'd expect to see some kind of a healthy retracement, right? And the area to the upside we'd be looking at is that just draws, our attention is drawn to, is these 87s. So I think here all these rallies into there could be corrective, and as long as we don't trade back above this area, it could still be very heavy, right? You see how there's a lot of sell areas are going to line up here, but right now I'd be very cautious because it looks like there's potential for a little bit more of a retracement. It's not something we would trade at all, but I don't know, unless you have a specific question. I'm not too inspired, right? Yeah, no, well, the session is recorded, so you can go back, look at the beginning, but we haven't looked at those yet. So on USD JPY, we discussed in the last Sunday outlook, right? We said when we were trading those lows, right, we were trading, trying to bounce it. We said we just don't understand, right, why you would want to play the downside. The risk reward, or at least in terms of asymmetric risk reward, seems incredibly skewed to the upside for bounces into the 103, 105, 107 zones, right? So here, basically, what's happening, it's a bit of a sucker's play to try and fade this. We feel, unless we have more clarity out of the BOJ, right? Because right now, it's just playing on something big coming out of the BOJ, whether it's QE, God knows what they're going to come up with, helicopter money, whatever, right? So, right, it's even though it's respecting technical levels here, I would be very cautious in saying, this is a trend resistance, or it feels like we may have bottomed, right? Because here, Jojo, does it make sense? All it's going to take is one headline from the BOJ, and this could be trading 110, or this could be trading 100 again, right? So these are not charts, are not situations where we feel you have an awful lot of edge, especially if you hold over the weekend, because you've got big gap risk, etc. So having said that, technically, right, let's try and look at it technically. This is a key resistance, right? Because you see there was this, when we started to puke, we had this big attempt to base, right? 110.50s. Then we used that support as resistance on the rotation down. Then we had this next strong support zone into the 107s, and then we have this strong support zone into the 105s, 50s, right? So this is really, these are all pivotal levels, as we discussed before, right? These are all pivotal levels. So I think here, as much as last week we had a lot more support than we had resistance, here we're going in starting the week with a lot more resistance than we have support, if you see what I mean. So to the downside, I think you'd have to look at that 103. To the upside, you're looking at 107, 107 down, 105.50, 107 up, you're looking at 110.50. Those are the technicals, and you've also got an awful lot of overhead resistance, not only because of all these support zones, previous support now will be resistance zones, but also because you've got the 50 DMA coming in, you've got the 100 DMA coming in, so there's a lot of resistance, right? But here it's just market is pricing something big out of the BOJ. So, for this to spike aggressively now after this repricing, they're going to have to over deliver and big. So be very cautious. But I think the way this is trading, 300 to 500 pips up or down, it's only going to take a couple of headlines. So I'd be very, very cautious, right? It's, you can make money and you can lose money in these situations, but over a career, we feel that there's very little edge to be had in just trying to take shots on what could possibly hit the wires, right? Okay. Okay, any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Yeah, no, we don't have a set time here. The only thing is I'd like to keep this session, kind of like under 1 hour, because if not, it's just the upload time is a bit longer. But, we try and do this I used to do these every Sunday, but we try and do them at least once a month now. Probably did them every Sunday for 2-3 years, but it's, just my way to sharing some time with you guys. So no set agenda, no set questions, just anything, shoot, we'll tackle whatever you want to discuss. Yeah, we looked at oil before at the beginning of the session, so if you missed it, you can go. Sure. Hey, thank you so much for the kind words, Fausto. I'll do my best. The quotes, hey, it's not as easy to come up with something every day, but I'll try and keep it up as long as I can. If not, I'll have to default on using other people's, but I'll try and keep it up as long as we can. Yeah, we've got a lot of, yeah, hey Rags, how's it going? I think that because of all the wheeling on BOJ, etc., dollar, etc., some of the most interesting plays for me in the past weeks, simply because I haven't been particularly interested in euro and cable, except for very tactical plays. In terms of bigger plays, is positioning on Aussie and Kiwi, right? I think those are particularly interesting. Now, I'm not a huge fan of trading AUD NZD, Fausto, so If you have a specific question on that, we'll look at it, no problem, right? And if not, I'll do Kiwi and Aussie. But if you have a specific question on that, we'll look at it. Now, keep in mind, a lot of people, I haven't been drinking. It's only Rags who's been on the drinks, right? I haven't been on the drinks yet. I think a lot of people are using the excuse of the yields to justify people piling in or piling into Aussie and Kiwi, right? The only thing I'd like to remind people is that, you know, nothing's really free, right? So if something's giving you 2, 3, 4, 5, 6, 7, 8 percentage points over something else, there's a reason. The markets do not like or don't have a habit of handing out free money, right? Free money usually comes with a big price, and that means that sooner or later you're going to get smacked. So remember, they can come out and cut rates anytime, right? There's a reason why some currencies or some bonds pay a higher rate. So having said that, our outlook is that, our thought process is that both Australia and New Zealand are not particularly enamored with the fact that their currencies are strong or any kind of strength in the currencies, and they're more than willing to talk the currencies down or more than willing to do something, right? Is that going to be an easy play? Absolutely not. It'll be choppy, but we like to keep that in the back of our minds. So how does that translate into something actionable? That translates into the fact that we would not be chasing longs on Aussie and Kiwi, right? Okay, we feel like most cases these will tend to grind higher or take the steps higher, and they might jog up the stairs, but they'll most likely take the elevator, and the elevator with the shaft cord broken to the downside. So we particularly prefer to play those moves. We prefer that velocity of move, right? So going into the charts, and again, keep in mind that there's been talk about some emergency meeting out of New Zealand, God knows what. We think it's not going to be positive for Kiwi in general, whatever, however this breaks out. So moving the mumbo jumbo way, right? Let's look at technicals, let's look at charts, let's look at stuff which is not subjective at all, right? So here we've got the Aussie chart, right? And I know a lot of guys, especially the harmonic players and the Elliott wave guys, are going to be looking at, you know, 78.6 coming in higher up, right? We're not particularly smart, so we try and keep things very simple. We just like to look at horizontal support and resistances, not get too carried away. But here, what's happening is we'd identified, you know, going back on the charts, that we've got two big pivotal levels, right? The 76.20 and the 75.30. And in the past, we've had a lot of chop inside this zone, so we're very cautious in trying to read anything one way or the other inside this area, right? But we're very cautious, and we're very attentive to how price can break outside this zone, or how we can build momentum outside this zone, right? And one thing which is clear is that a lot of times in the past, when we broke above this area, we couldn't get an awful lot of traction, right? Even when we did get some traction, we ultimately came back down fairly heavy, right? So we really like this zone to give us a gauge of bull bear line, right? And you see what happened after this aggressive move down, right? We came right back out in this slow drift, which tends to catch a lot of retail guys off guard, right? Slow drift, slow drift, slow drift. And what happens? Most likely, a lot of the retail crowd that were short there, once we started to break above here, right, probably towards the beginning of the week, they started to get a little bit excited and started to get long, right? We know how that movie ends, right? So what's more important to us is the day close, right? And here, even though we have to admit that it's very choppy, I think it's very hard to argue with the fact that we've been clipping weak players. I hope I didn't break any eardrums there, but we've been clipping weak players to the upside, but we can't get awful lot of traction. So as long as we can't get traction to the upside there, we'd have to say 73.50 is a tract. Now, Rags, the problem is that it's far from being pure, in the sense that you've got an awful lot of sloppy support here, And what's coming up to spoil the party? You've got these moving averages coming up here to spoil the party. Do you see what I mean? So it's far from being a pure play, right? I would suspect that there's awful lot of retail with stops left, right, and center inside the zone, but I would believe that if you're structurally short from a bigger picture view, from a macro view, etc., your stops are here at best here. They're not layered inside here. Does that make sense? If you're riding long, or if you've changed your view structurally to the long, you don't have stops here, right? You're probably hiding below here, below here, below here. So what does that mean? That means that most likely this is we could easily get an awful lot of velocity of move inside range. That doesn't necessarily mean anything. You might not even get any verbal talk, intervention, anything, because it's a big chop range. So it's the classical chart that spells a lot of pain to people who want to play it tight with tight stops. And a lot of people who have strong convictions, they get frustrated because it's likely going to stay very, very choppy. Gun to the head, we would be selling any strength, not buying any weakness. But I think I think the only fair thing, or at least in our view, is that this is far from being a clear and pure chart. Does that make sense? And again, the reason is it's very choppy because why would anybody want to trade it with when it's being, look at the ranges, look at the candles. Why would you want to have it stop inside that range and get in trouble on the grind higher in equities? It almost looks like, Rags, it almost feels like Aussie and Kiwi want to grind higher just in sympathy with equities. But, you know, nobody really believes it. And, you know, the talk about stairs up and elevator down, you know what's going to happen to the high beta currencies, right? If the ES is going to puke 2040 handles, these things are going to be sayonara, baby, right? So it's tricky. They're tricky ones to chase. So again, now looking at it also from a bigger perspective, if you look at it the weekly, right? You know, you can make it's bearish, but you can still easily make a case for some more upside. But you see how you'll probably find sellers. And in our opinion, you'll probably find a more than happy central bank to talk it down or do something. So we just don't understand. We don't see the edge in trying to be structurally bullish, because even if you're looking at what are the resistances, you've got a resistance coming up here. You've got a strong resistance coming up here. You've got a very strong resistance coming up here. Whereas the closest support, does it make sense that is further down? So we still think in terms of asymmetric risk reward profile, if you have to play at all, we'd be selling rallies, not buying dips. Does that help? And another thing I would say, in slower markets, when you get a lot of grinds to the higher or lower, you get a lot of velocity of moves inside range, you've got a lot of headline risk, you've got a lot of things which are trading at extremes. If I could give you a little bit of advice from somebody who's been around and gotten in trouble more than once over the years, don't try and read too much into normal correlations. Correlations work until they don't, right? And then you get in trouble. And especially when you've got slow markets, markets that are kind of, grinding higher, grinding lower, or air pockets, or whether it's the ES that's grinding higher in the overnight session, God knows what, you're getting news on the wire, speculation about central banks doing something. You might get an awful lot of positioning and squaring to prepare for what's being anticipated. And what that means is, whether that means liquidating gold to be able to have some free cash, or whatever, liquidating stocks to have, whatever it may mean, you have a lot of short-term moves, especially in low liquidity chop, that may seem counterintuitive, or that might fool you if you're just stuck looking at traditional correlations. So don't make things harder than they should be. I would warmly recommend to just look at each chart by itself and try and focus on how that specific chart that you want to trade is behaving around support or resistance, or just focusing on trying to find opportunities for you to allocate your capital in interesting risk reward areas that you may find on any chart, regardless of whatever the normal correlations are doing or saying. Does that make sense? Now, before we continue, because 50 is going to start rambling, we got to be careful if the ramble starts. Now, this is much more interesting to us in terms of, high beta currency, also looking at what we discussed on Aussie, right, in terms of playing the short side. And it's the same thing, because you see how also we've got a bit more room to run between this choppy zone, right, similar to what we had on Aussie. And here, these failures to hold back above this zone to us presented extremely interesting areas to try and play that move back into the 7170s and a possible retracement right back into this previous support resistance zone coming in here. So this is our favorite way to try and express that view that we also looked at on Aussie, and we think Kiwi's being a nicer play there, right? So it's a very similar discussion on Kiwi, right? Except we've had a much sharper correction, and there's a lot of talk about the RBNZ or whatever's coming out. We'll have to see what comes out this week in terms of data. But what we would say on Kiwi now is, as long as we don't get sustained hold above those 73s, this is looking heavy. And possible bounce zone is into these 70-70s, 70-50s, right? But especially on the data or whatever comes out, if we start to get a daily close below there, then this could get fairly heavy. And especially if equities, or we get some wheeling and dealing in the bonds, etc., this could move quite in a quite interesting fashion. Does that make sense? Now, I think there was a question on AUD NZD. Have I answered it by going through those charts, or do you want me to look at AUD NZD? Let's see. Or any other comments, any other questions, anything anybody wants to look at, shoot, we'll look at any chart. Yeah, I think we've talked about this a lot in the past, and we strongly feel that a chart is a chart. So whether it's Shrimp Futures, DAX, Dow, whatever, Euro Cable, we really don't care. A lot of the guys who attend the weekly webinars and stuff, sometimes they make fun of me because they ask me to look at a chart, and I'll open the chart and start discussing, and then they'll say, hey, you're on the wrong chart, because it really doesn't matter what it says, what the symbol is. To me, it's just price moving around levels. So to answer your question, yes, I would agree that there have been a lot of charts that have not been very tradable recently, but that's not something that we're particularly bothered about, right? We don't like to limit ourselves, and I had this discussion recently. If you're working in the bank, in a big prop shop, etc., in the past especially, you'd have somebody who's the euro dollar trader, somebody who only trades cable or whatever, right? You've got people that trade a specific instrument or two instruments because they're experts at that. There are a lot of people on the desk, etc., etc. Now, as a retail trader at home, we think that it's just a shame to limit your opportunities, because certain instruments are in and out of fashion, certain instruments move more or less, right? So it doesn't make sense to us to say, I only trade euro, I only trade this, I only trade that, because you might go through periods where you will be effectively technically unemployed if you're disciplined, because there are no interesting setups. So we like to say, every chart support or resistance works the same way no matter what chart you're using. Make sure you understand your instrument, make sure you understand the volatility of that instrument, make sure you understand the contract size of that instrument. But don't limit yourself to only trading the currency of where you live because you've got some kind of emotional attachment or you think you know something about it. Nobody knows anything about anything. The only thing you should look at is support, resistance, or chart, or whatever method you have, and a chart is a chart. Don't limit yourself would be my way of looking at it, okay? Sure. Euro, what's going on Euro? Well, Euro, you know, we discuss here, we'll have to see how we open on this Turkey news here, but we discussed the fact that we're trying to hold some kind of downside here, right? And it looks heavy, right? There's no other way to discuss this. It looks very, very heavy, and especially as long as we hold below this 1050, it looks heavy. The only thing we say is we find it hard to want to short into this kind of candle, right? Into this kind of support. Now, I'm sure there are going to be people who say this is a done deal, whatever. But what we would suggest is go over your charts, go back, not 2 days, 3 days, go back, I don't know, 10, 20, 30 years, and try and find all the instances where you would be trading aggressively against this kind of support or against that kind of resistance, and see what the win rate of such strategy would be. We would suspect that you're probably making life a little bit harder than it should be for yourself. So having said that, you know, you've got a base support coming in here, right? And that's going to be a tricky one because you have another support further down. But, you know, right here, the only thing you could say is heavy as long as it holds below 110.50, and to the upside, 112 should be fairly decent resistance. You know, the more it behaves like this and it can get lower, if you get a squeeze, it could be very aggressive. It could, you know, it might even go higher. Our outlook hasn't changed for many, many, many months. And the outlook is that, globally speaking, we would expect Euro to continue to stay, broadly speaking, in some broader chop zone, sideways chop zone. We don't think it's the time to look for big swings one way or the other. So we're just going to be focused on the charts. We're going to look at intraday plays, but we don't have a strong opinion either way on trying to look for the next big move, because we think there's still, you know, everybody's pretty much happy with Euro inside, you know, 115, 108, something like that. But stranger things have happened, but we just don't feel there's an awful lot of edge here, okay? Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss, any chart we haven't reviewed, people want to review? I think we're going up on 40 minutes or so. So yeah, sure, CAD. Do you have a specific question on CAD? This is another chart we don't particularly like. We think it's particularly choppy, and we much prefer trading crude, right? And I don't know if you caught the beginning of the session, but you know, we'd be structurally short crude, looking to sell any rallies for a move back to the 42s. And we think that's a much purer play, right? You know, the broad theme now is dollar strength. Are we going to start to get dollar strength again? And that's a big question. We feel that there are 3 big levels here to keep an eye out for. And, you know, 135 to the upside, 129, and 125. This is a classical example of trying to make things harder than it should be on a bigger picture. We've been trading this we've been trading this intraday here and there for some very tactical opportunities. But again, Rags, if you're long, really, and you think we've bottomed, are you going to be trading with a tight stop anywhere here? You know, more serious players, not really, right? Not really. If you're short, are you going to be trading with a tight stop anywhere here? Not really, right? So the problem is you're going to get but even if you're trading intraday, you have to be careful on these things, right? Because since you don't have the bigger players or the bigger vols will not be involved inside this likely be involved inside of this choppy range. So that means that even as an intraday player, you have to be careful, because you could get chopped up an awful lot. That's the pain in the butt here, right? And what's a pain is, you see, you're not getting a clear, you know, it's kind of like going the opposite way. And here it's kind of it's a bit of a mess, right? It's not really clear. So I think here a lot of people are getting taken out to the woodshed in the middle of the range, but really all the structural longs are holding long and strong, right? And the shorts are just feeling a little bit more uncomfortable. And you know, especially if crude gets more downside, you know. But again, I don't think there's if anything, I'd probably be looking for more upside, but I think it's very, very choppy here. I think it's a tricky one. I think it's a tricky one, right? It's a tricky one. Even if you're looking at it, you know, let's let's look at it intraday, right? So if we're going on a 1 hour chart here, and you see how choppy you've got a lot of choppy action, right? I mean, you can argue that it has been, the move down was fairly structured, but it's tricky because you see how you're breaking these areas, but you still got spikes. It just doesn't look like it's particularly interesting to me. But you know, here it's I just think it's a bit messy. Yeah, there have been interesting opportunities, but yeah, you know, DAX. I think it's the same thing with a lot of the other ones. I think you've had a big run on DAX, so you know, to me, getting excited on DAX to the long side, it's kind of like getting to the party when the punch bowl is empty, right? Exactly, right. You've got a lot of interesting basing action here on DAX, but now that we're starting to rip higher, you're coming into this 200 DMA. You've got this descending trend line as support. You've got this high. You've got this high. Does it mean it can't go higher? Absolutely not. But it's got a lot more resistance to run into than support. So we'd be a little bit cautious there. Again, the open is going to be interesting. We'll have to see what happens in do I have a specific Forex pair I like to trade? I'll trade whatever sets up an interesting risk reward, right? You know, an interesting setup. I don't have anything that, as a general rule, I want to trade something that's liquid, right? But so I won't be trading exotics. I don't trade funky pairs, but I think what's likely to be interesting this week will be, you know, Aussie Kiwi will be interesting, right? Probably the most interesting pairs, but we'll have to see. You know, if you're running positions on yen, that could be interesting. We'll have to see. It's also going to be a tricky open. We'll have to see how we open. Cable, yeah. I mean, I don't have a particular view on cable. I think it's a lot of wheeling and dealing. We discussed this last week. Before the, it's funny, right? Because before the BOC rate decision and before the BOE, you know, we talked about, you know, really what edge is there with trying to play with a consensus? And really, if you were the BOC or the BOE, wouldn't you want to keep your powder dry, right? Instead than blowing all your bullets ahead of God knows what's going to come. So I think the reaction were fairly classical, right? Fairly classical. If you look at cable from a bigger picture, I think you can confirm your bias, right? Because if you want to be long here, you can say, well, look at this. This is setting up to rip to the upside. I think there's an awful lot of uncertainty. There's a good chance we're going to get a 50 point cut. So I think it's far too early to be able to take a structural view on cable or a bigger picture view, right? We've finished on all our targets, right? We had 123 extension, this was done, and 150 extension, done. So right now, it doesn't make sense really to get aggressive here in any direction unless you're playing from an intraday perspective. Now, keep in mind that, you know, as long as we don't start trading above the 130.50, this is going to continue to stay very heavy, but you get awful lot of wheeling and dealing, right? Now, that doesn't mean you don't get a lot of interesting opportunities. Like you can see this action on Friday, right? We broke above the previous day spike. You know, we discussed that on Euro. We don't like trading against these. We like to trade with these. So on the move back up on Friday, failure at these highs, you know, you've got to move back down. You've got, bam, chance to sell this retracement, moves back down. You've got a chance to sell this retracement again for a move back into this mid-range, back towards the bottom of the range. So there have been a lot of tactical opportunities, but I think especially with these pairs, it makes a lot more sense to try and stay out of the news, try to react and try and look for the more tactical plays intraday and not hold overnight risk, because I just don't think it's worth the risk. Okay? Any comments, any questions? Anything anybody wants to look at? Anything anybody wants to discuss? Exactly. Yeah, my pleasure, man. Okay. Sure. Yeah, well, just hit me up on Twitter if you have any questions during the week. We'll try and get them. Yeah? Sure. Okay, great. So, guys, I'll post the recording. It'll take a little bit to load on YouTube, but it'll be posted. Thank you so much for stopping by. Have a great rest of the weekend wherever you may be, whatever you may be doing. Again, thank you so much for all the guys who are liking and sharing the stuff. It's very much appreciated. Good to see that the content, people enjoy the content. And again, I'll send it out. Have an awesome one. Thank you so much. Have an awesome one, and bye-bye.